Avoid these 3 costly mistakes before you buy a house in Toronto. Hey everyone, Steve Kim here. On today's video, I'm going to share with you 3 mistakes you absolutely need to avoid before you buy a property in Toronto. So number 1, pre-approval. Everyone talks about getting pre-approved. Your mom, your dad, your aunt, your uncle, everyone under the sun talks about pre-approval. Yes, get pre-approved, but don't forget there are additional costs associated with that, like mortgage default insurance. Now, if you buy a property in Toronto under $1 million, yes, I said under $1 million. Yes, you can still buy a property in Toronto under $1 million. Look, if you don't have 20% down, you will need something called mortgage default insurance for any property under $1 million where you don't have 20% down. If you've got 20% down, then stop here and move on to number 2. If you don't have 20% down, listen up. So mortgage default insurance is really given out by 2 big players in Canada. You have CMHC and Genworth. Those are the big 2. I'm going to break down with you pretty much what that mortgage default insurance is and that you're on the hook for that. So please make sure to pay attention because this is an added expense coming out of your pocket. Okay, so I take a purchase price of a property, let's say of $950,000. Now, $950,000, you're going to need a down payment of $70,000. Yes, I said $70,000 at $950,000. So, you got $70,000 down. Well, the mortgage default insurance premium is going to be roughly $35,200. And yes, that's getting billed directly to you. And now, no, you don't have to pay it right now. You can make a lump sum payment, or you can ask your lender to take that total amount, $35,200, and roll it into your mortgage payment. So one way or another, you are on the hook for that additional $35,200. Now, for a mortgage default insurance, in terms of the premiums, they can range anywhere from about 2.8% all the way up to about 4% on the purchase price of a property. So that's something you need to pay attention to, and you need to know, and you need to plan for right now. Number 2, land transfer tax. Oh yes, land transfer tax. Because you're purchasing a property in Ontario, those properties, a portion of that, the tax, is going to be given back to the government. Now, land transfer tax across Canada, province to province territories, they're different, right? There is no kind of status quo. So I'm going to use Ontario because obviously we live in Toronto. If I take that purchase price of $950,000, the provincial land transfer tax is $15,475. I'll say it again, $15,475. Now, if you buy a property in Toronto, there's something called the municipal land transfer tax. Yes, 2 land transfer tax. On a $950,000 purchase price in Toronto, you're looking at an additional $15,475. So as a general rule of thumb, buy a property, I'm going to say take about 1 to 2% of the purchase price of that property and save that for the land transfer tax. Now, on $950,000, don't forget, you're going to get hit with that added cost of $35,200 for mortgage default insurance. You're now going to have to pay an additional $30,950 if you're buying a house in Toronto or a condo in Toronto at $950,000. So already right off the bat there, you're now at about just over $66,000. Right? $66,000. So although you just got qualified for $500,000 or $600,000, don't forget, you're still on the hook for X amount of dollars as well. And the third thing is home maintenance. A lot of people call this the contingency fund. Whether you're buying a brand new condo where you think nothing's going to happen, and probably, if it's a good quality villa, nothing's going to happen for the first few years, but I always remind my buyers to have a contingency fund, a reserve fund for kind of those rainy days or something happened. So always make sure you do a home inspection. You may say, Steve, home inspection in Toronto, multiple offers. Are you crazy? We don't got time for that. Nobody got time for that.
Ain't nobody got time for that.
You got time for that. Always tell my buyers to get a home inspection. Why? Because why not spend that few $100s now to avoid the thousands or if not tens of thousands down the road because you just didn't know. And if you're saying, Steve, we don't got time for a home inspection, they're holding off on offers in 3 days. If you really love the house, book the home inspection now. I've worked with buyers where we have gone before the multiple offer date, book the home inspection, and we've seen so many issues to the point where it's not the house for them. So I'm going to say that small $300, $400, $500 investment, I'm going to call it, is going to save you so much more headache. And it's really going to allow for you to position yourself in the way of, yes, I'm going to pull the trigger and I'm going to buy this house. Home inspection, it's done. We know what's kind of hidden here and there, and we're okay to take that on. Or the home inspection is going to be like, red flags, oh no, and you walk away from the property. So please make sure that you allocate funds and money, same thing, for the home inspection and most importantly, home maintenance. As a general rule of thumb, I'm going to say about 2 to 3% of your purchase price you should be putting into a rainy day fund. So these are the 3 mistakes to avoid or to prepare yourself for if you're looking to buy a house in Toronto. If you found any value, even just one small thing, in this video, please give me a thumbs up, comment down below. If you found no value, thumbs down. And please, while you're here, please make sure to hit that subscribe button. And while you're there, hit the notification bell so you get notified of all my great videos. Yes, you. Do it. Now, as always, be great, be kind, everyone. Take care.